Greetings, Jedi traders. David here of TradingFibs.com to bring you the technical momentum outlook for week 21. Week 21. It is May 21st, 2017. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, Jedi traders, it's been a while. Took a little time off getting back into the market. So let's jump right in to week 21 as last time we were online here, 5-9. It's been a while, I'd say. So market action getting a little bit of some movement here this week. Let's just jump into some quick pick as where we are. Again, week 19 finishing off here. Very slow week. Week 20 actually with some nice movement here to the downside. But here we are. S&P futures still holding up at the MML highs here on the weekly chart on the S&P 500. Take a look at the moving averages here. You can see it's all been about regaining traction above that 10-period moving averages. We can see the NQ here on the left here, 10-period moving average, just managing to regain some of that movement upside, but not even coming close to the 50-period moving average, while the ES doing a nice job finding support there after that drawdown this week on both when that was that drop on Wednesday, losing that support there at the 10 down to the 50, even lower, and then regaining that traction back upside to only come right back up where we dropped down on Wednesday. Relentless is the name of the game. All right, so taking a look at the daily gaps, we actually closed out several on both the YM, and as I've said every day in the daily trend, and I have for weeks, 100% of the time, indices close out downside gaps. Now, do we have downside gaps that are even further? Sure we do. Will we get those at some point? Yes, we will. Will it be this year, next week? I have no clue. I have no idea. I just know they exist and they will be closed out. So at some point, markets will retract down deeper. But nice to see, even on that gap up with some consolidation here on the YM through the majority here of May, as price action came down, closed those two open gaps in last week's price action and managed to get back upside. So now we got some open gaps up high, still sitting at the all-time highs. Up here is the NQ, YM back upside, and ES, same pick, closing out those gaps. We'll take a look here in a moment of where the remaining of those existing downside gaps are. Now, one of the things that we've been looking at is price action continues to have a lot of intraday noise, and by any measure, I will tell you that intraday trading can be very tough. Long tails on candles, depending on where your stop is. Sometimes the lower time frame can chew you up and spit you out. So sometimes it's just simply pulling back from the big picture using any moving average. It could be a 50-period moving average. It could be used a 34. There's a variety of different kinds. I have no allegiance to any specific one. There are some that I particularly like to follow. But the point is regardless of the moving average, when you take a look at price action above one and below one, it's the 5144 EMA cloud off a 1-minute chart. Here we have a 25-tick range chart. So last week's price action, when you take the bigger picture and you put it for the entire week session, we had 3 basic trends, and that eliminates a lot of noise. So for those traders, especially day traders who are struggling with a lot of that small time frame stuff, again, you have to remember on a larger time frame, you might have to have a little bit of a bigger stop size at first, but once trend gets going and managing stop on lower highs, higher lows, whatever direction you're headed in. Here we could see that drop down on Wednesday on the NQ on the Globex session allows you to be in those sessions. It can be frustrating, especially after having a nice Globex run and then the U.S. market doesn't go anywhere. So here we are, price action across the 50 on the NQ downside Wednesday. Little bit of consolidation here at the lows. You can throw in the MML levels, Murray math levels as well, which actually happened to be a nice support down here, and then bounce yourself back upside on both Thursday and Friday sessions. So nice move. So again, something to consider both on the NQ and same pick on the ES. There it is, almost a mirror image. Here we are on a 10 tick range chart. We're usually on a day, we usually take a look at a 5 tick range chart. Here you are, break action above the cloud, 51.44, and as we talk about every day, the 534, that's row number 2 here. There you are, golden setup, and we had several of those last week. Exactly the picture perfect setup, and you just let your contracts run. Get that stop to break even, as we talk about in the trading setup. So what am I talking about here? So if you look here on a larger time frame, let me pull up one of the charts here. This is to the short again. This is the basic premise. No moving average. Again, your preference if you want, but 51.44. Just one trend. So we know everything looks great in trend, but from this trader's perspective, as long as price action's underneath the cloud, I then give it the highest probability setup based on, am I in sync with another range chart, which is the 534 EMA? Have they crossed over? And the 51.44, basically the horizontal bar at the bottom representing the same picture as here on top. And that's it, and it's management from that point. All right, so let's take a look at I am finishing up the week on the MML big pick. Here we can see price action finding the MML lows. Here we're looking at an overlay of several time frames. So we're looking at 60 minute, we're looking at on a 4-hour chart, we're looking at a 60 minute, we're looking at a daily and a weekly, and we're noting what we call both the zone high and the zone low. And again, once that this can be reset once or 2 times in a week depending on price action. So for instance, last week the ES still moving up there. If you remember the picture here I was showing you, there we go, where ES at the beginning of the week were upside, so MMLs are at the high, and then eventually price action started coming down. So MML resets a little bit lower, resets higher, and then eventually Wednesday, Thursday, Friday, we have the same numbers. So we're looking at a zone high, we're looking at a zone low, and those zones are a consolidation of different time frames, 60 minute, daily, and the weekly. And again, it's just a reference points. It's not a matter of as soon as it hits the 60 minute oversold or the 60 minute reversal, that's where I'm going to take the entry. It's just like Fibonacci numbers. It's a retracement point. We get a zone of those numbers. I'm looking for major resistance. And sure enough, the 50 SMA, which we looked at here on the ES on the moving average, let's pull that up one more time. There it is, 50 SMA. We knew that on Wednesday it was a news bet. And so let's go back to that ES chart. All right, so ES price action down here finds the support off the MML lows and gets a spring right back upside. So not only am I looking at intraday charts on a smaller time frame, but I'm knowing that the bigger time frame also has some support here, so I'm more likely to maybe take the long. And again, if you're going for the bigger time frame, like we saw here on the ES, you tie it up, you cross over the 50, and there starts the higher probability setup. Again, a combination of strategies to give you the long. Again, it's up to each individual trader's choice where they want to, whether they want to take the intraday setups on the noisier charts, lower time frames, or start to look to the higher times, especially with the way the market has been most recently. And then finally, the NQ finds its way from the MML high, just barely coming down the MML low. It's not a science, it's not a holy grail. It's the fact that price action broke through support at the 10 EMA, continued downside. You never run it to the target anyway. You front run it always, holding above the 50 period moving average in the zone low. But I know that once I'm down here and price action moves back up, I'll be looking to the zone high, and I have some idea that price action will have some resistance up here as price action moves up. All right, let's get right into the charts. Let's get into the, as we mentioned, the daily gaps, noting price action moving back up. So keep that in mind as we roll into week 21. Looking on the NQ to come upside and perhaps close out the open gap, all depending. We'll take a look at the economic calendar as we are rolling into the end of May, which means we're talking about end of June contract, as well as any economic events out of Washington, good old Washington politics. All right, so there are the gaps on the NQ, YM, and ES. Keep that in mind. Again, the ES, while we closed out these two open gaps downside, 23.15, 75, the next zone all the way down to 22.79. Once we drop from there, we'll be looking for several lines. Yep, there's that one, 18.60.75. I have no clue when we're going to close that out, but I can tell you at some given point, we will eventually run those down. All right, let's take a look at the multiple overlay as we just looked at. Price action again, holding here as we roll into Sunday's open. No crushing news over the weekend at this point to send markets flying, but you never know. Markets might just gap up or gap down, but nice to see the market bounce back up. Long-term holdings doing exceptionally well. There we are, back up, 10-period moving average. So we'll be looking for the beginning of the week at the zone high and zone low down below, which would give us anywhere from 59.50 down to about 43.75, which we would find support on the 4-hour. Keep in mind the open gaps. All right, there's our ES big picture. We saw the weekly there. Let me jump over to a chart that I've been working on. This here is a range chart. Again, whether you use the MML levels or not, that's up to each individual. But here I am on a higher time frame for the ES. So for those of you looking, this is a great high probability setup in combination. Price action, you can see. Let's go ahead and open it up here. We're at the MML highs. This was set on Wednesday. Had no reset. Solid bodies down below the 51.44. The cloud is red. And I got the 534 all in red here. Price action downside, actually an earlier entry up here. Once you broke right here, 23.90.75. Eventually the T3 moving average finally slopes down. Actually, your highest probability setup is right here when everything is in sync. But here you go, a nice setup downside, a pullback. Your stop is at break even. You're doing great. You're running the ES all the way down. Downside to the MML reversal, and look what you get. You get a bounce back up. I wouldn't say I would have taken the bounce here. Once price action broke up right here, and those of you who know what we've been talking about, the MML levels, breakout of 23.59.50. The 534 is in sync. The cloud's in sync. Nice move. Price action pulls up. Now, the only concern I would have had here is price action pulled back here, and what do you got? Maybe you got your stop at break even, and then you get stopped out. You got another opportunity to get back in the trade. There you are. Solid body tail up. You're back down. Unfortunately, maybe your stop's taken out again. You got yourself another opportunity. 5-minute chart and back up. So range chart, again, just wanting to throw that out there. If you guys want to use that intraday, might be a new way to look at the market instead of getting chopped up in the small noise. But again, I'm going back to the big picture for the week. Again, I'll update you through the week if price action changes, but I'm looking zone high up here up to 24.06, which will get us back up to those all-time highs. Any support will look to the 50, and then zone low, actually, besides 43.75, look to 23.36. Anything lower, we'll start chasing some of those open gaps as well. All right, take a look at the NQ. There it is, 4-hour chart, open gaps, which remain downside. A little bit deeper at this point. 5,700 is to the upside, but 55.12 will start to get us down near the zone low, which would be the 50. So downside, I am looking to the zone low for support off the 50. We're nowhere near the 200-period moving average, so I'm not concerned about that yet. Any downside support, there's my zone low to start out the week. Zone low, zone high, up to 57.81.25 as we flip a coin, guys. It's 50-50 which way the NQ is running at this point, but currently momentum based off of Friday's price action to the upside. Again, throwing up a range chart here for you guys. You can see price action on a 5-minute overlay by 60-minute. Nice to see that even the small little trend there on Friday found its way upside to find resistance. On the smaller time frame, bigger time frame as we run upside. So again, the momentum looking upside here from 57.03 up to 57.61. Again, monitor that during the week. All right, again, I showed you the YM picture. No change here as we hold 50-50. Can run upside here up to 21.055, reversal 60 minutes. And here's our zone low down here at around 508. Again, any catalyst across the world or economics-wise can throw this in either direction. All right, let's take a look at the GC and the CL. Gold as it makes its way up from the MML lows, breaking the 200, both the 50, but finding support there. So that we found the resistance on the 4-hour chart. You can see the MML. So I got to go, first of all, with the momentum, as we can clearly see, is moving upside after it found support here. The major little concern here, any pullback, I'll be looking at 1234 all the way down to 1218, which would put me back down here at support. But again, if we can get an MML reset during the week, right now, currently trend is to the upside on the gold. Taking a look at the crude, as the weekly picture on the crude still holds here around the major support resistance. But taking a look at both the daily and the 4-hour chart, daily, again, we're finding the same picture as we saw on crude there, on gold. Right here, rejection or a little bit of resistance here at the 200 period SMA as the momentum has been downside on the gold for some time. Here we can see the MML low to high for the week, so momentum clearly upside for the week as we worked both off the higher time frame on the daily and the 4-hour chart. So momentum, a little concern up here, want to break out. We're looking still up here, back upside to 53.13. If any pullback, we'll still look to 48.44 and down to 46.88 at some point if price action is unable to hold up. All right, that's the big picture, Jedi traders. Let's take a look at the economic calendar as we roll into week 21. We're looking at not only multiple Fed speakers through the week, we're looking at FOMC minutes. All attention will be drawn to Wednesday, I'm sure, when Comey takes the stand and testifies on the politics in Washington. Watch for market volatility at that point as well. All right, Jedi traders, I know it's been a while since I posted. We'll get back into the daily trend this week, but you want to make sure this weekend by tonight I should have the technical momentum outlook posted for week 29, including some of the charts and the outlook for the week. And also went ahead and held off from the week 18 recap or week 20 recap. So make sure you check that out at the end of this week. Again, we're leading into a holiday weekend, so we'll keep that in mind as we roll out the session here for the last week of May. So again, probably some good trading more at the beginning of the week. As we roll out the end of the week, might start to get lighter. Again, I showed you bigger time frame charts today. Keep those in mind. I'm going to be looking at those this week, trying to get a lot of that intraday noise. So until then, if volume lightens up, I can always drop the time frame. And again, always just trying to eliminate the noise as much as possible, meaning less bars on the chart might make it easier. All right, guys, I think I've covered it all for the outlook for week 21. That concludes my insight in the technical momentum outlook and the key futures markets as I look at every day. Hey, guys, feel free. Let's go ahead and post this here. Feel free to stop by not only at tradingfibs.com where you'll catch my daily trend, but also some other goodies up here posted at the top or in my social media outlets to obtain more information. You can find me every day on Twitter here at Trading Fibs. If you want more information, my simple strategy, as I posted here, one simple chart, right? Any market, any chart, any time frame. I prefer range charts. But again, whether you watch minute charts, tick charts, or range charts, it's up to you. But it will keep you disciplined. You can find me again on everyday Twitter. And as always, I leave the crystal ball to the experts. I'm only watching the charts in front of me. And I leave my bias at the door when trading. Hey guys, if you're interested in joining us with our like-minded traders in our community, feel free to join us any Thursday or Friday to view the live chart setups. You just go ahead and email me, david@tradingfibs.com. Hey guys, I also want to shout out Infinity Futures holding a live trading challenge here coming up on, I believe it is June 14th through June 20th. If you're interested in registering for that, great opportunity to get in with other like-minded traders. Again, it's a simulated account. I would treat it the same way you would do live trading. There's no reason why you shouldn't, especially if you're interested in doing this for a living. So there it is, the live trading challenge. And in addition, I will be hosting a webinar series May 30th through June 1st, Chicago time there. There's the topics we'll be covering, going over a trading plan, setting up. Hopefully there'll be a crossover. If you haven't had a trading plan, this might be a webinar you might want to attend as we go over these items on a checklist. So hopefully you end up with something there at the end. Go ahead and sign up there on the Live Trading Challenge website. All right, have yourselves a Blue Zone weekend. If there's anything I forgot, you know me. I'll go ahead and tweet it out. And have yourselves a great week. Again, watch those charts. Leave that bias at the door. I can't continue to tell you. Whatever your bias is about the market at this point, you think we're overbought, you think we need to come crashing down, it doesn't matter. Look what happened this last week, right? Market came down, boom, right back upside. Blew all those shorts out of the water. So another week of the dips, buyers buying the dip again. That's the way the market's going these days. So leave that bias, just watch the charts and watch the trend. A lot of great trend studies out there. That's what I'll be covering in that Infinity webinar, but everything looks great on trend. You all know that. Anyway, have yourselves a great week and have yourselves a good day. Have yourselves a good night and good trading to you.